There is kind of light at the end of the tunnel. There is talk of essentially Bitcoin being or having bottomed out already at this point. This one is funny because it is coming from WCCF Tech. It does say cross-asset dynamics, strong basing effect, and miners capitulation all indicate that Bitcoin has bottomed out for now. After a long jury slumber, Bitcoin bulls are tentatively awakening to the winds of change, testing the newly released bullish currents while remaining on the lookout for another bearish drought. While it is too soon to proclaim that Bitcoin has carved out an ultimate cyclical bottom, favorable cross-asset dynamics, robust basing effect, and devastating capitulation from the cryptocurrency miners cumulatively lend credence to the hypothesis that at least a local nadir has been formed through the blood and toil of bruised investors. A wonderful way of understanding Bitcoin's price move is to view it on the context of cross-asset dynamics. After all, Bitcoin's 30-day correlation with the S&P 500 index remains elevated, currently hovering at 66%. With an overwhelmingly proportion of Bitcoin's bullish thesis depending on the cryptocurrency's future adoption rate, it is hardly surprising that it continues to act like a risky asset. Consequently, the fate of the world's premier cryptocurrency remains inextricably linked to the wider risk universe, particularly U.S. stocks. With headline and core inflation in the U.S. stuck at a multi-decadal peak, the Federal Reserve has no choice but to stick to its hawkish interest rate increase trajectory. As interest rates increase, the future cash flows, which form the fundamental thesis of growth-focused equities, are discounted much more heavily, leading to a derating of such equities. For much of 2022, this effect has continued to dominate, thereby driving the weakness in Bitcoin along with the rest of the risk universe. Now, however, with expectations of recession gaining ground, investor sentiment has hit rock bottom. Consider Bank of America's latest fund manager survey. The percentage of fund managers expecting a stronger economy has crashed below the level of the great financial crisis of 2008. This is despite the fact that U.S. equities are still higher than their 2020 levels. Moreover, the cash levels or indication of degrossing are now the highest level since 2001. This rock bottom investor sentiment recently compelled Bank of America's Michael Hartnett to turn tactically bullish on the risk universe, boosted by the upcoming buyback galore, which is expected to see $5.5 billion in corporate demand for U.S. stocks every day through July, starting this Friday. This, of course, bodes well for the short-term prospects of Bitcoin. Bitcoin has managed to establish a relatively strong base from a technical as well as a long-term holder's perspective. In our recent post on this topic, we had identified that the $16,500 to $18,000 price level as a key demand zone. Bitcoin's recent price action proved that the zone remains a potent bulwark to the further weakness. As is evident in the chart above, Bitcoin's price rocketed away from the pertinent zone, establishing its primacy. Moreover, this price action was followed by a relatively strong consolidation around the $20,000 price level. Both of these factors suggest that a strong base has been formed and is likely to hold in the short term. Additionally, with long-term holders of Bitcoin, defined as investors holding the cryptocurrency for a period of at least 1 year, now reaching 40%, a strong basing effect can be witnessed from the perspective of investor profiles. Bear markets usually do not end until some sort of capitulation is witnessed. Well, that phenomenon is currently being witnessed by Bitcoin miners whose cost indicators are soaring in tandem with a decline in Bitcoin's hash rate. The inventory levels of Bitcoin miners are currently sitting at a 1-year low. Bitcoin's miner inventory levels at a 1-year low right now. They have been de-risking and selling off their Bitcoin inventory since January 2020 this year. The downtrend has not stopped. This is perhaps a positive thing for the price of Bitcoin because many miners have de-risked. Moreover, Bitcoin hash rate has entered a downtrend for the first time since July of 2021. We've been noticing this as we cover it on the channel every day. As per the trend witnessed in 2018, this capitulation is likely to last until mid-September. We had noted in our previous post that on this subject that Bitcoin's rip-roaring gains are likely to materialize in the second half of 2023 ahead of the cryptocurrency's next halving event. It would be interesting if it happened before the event. We continue to stick to that prognosis. While Bitcoin is likely to record healthy gains going forward, the nascent bullish regime will remain vulnerable to the advent of a recession and the corresponding reaction function of the Federal Reserve. This is doubtfully important as Bitcoin has established itself as a risk asset that remains well correlated with U.S. equities. Consider a scenario where a mild recession in the U.S. is unable to tame core inflation, or one where the Fed capitulates before truly taming the ongoing inflationary impulse, thereby setting the stage for a devastating redux. If you are a long-term holder of Bitcoin, congratulations, you just survived one of the most difficult financial periods in around 2 decades. If you are looking to re-enter the crypto sphere, considering nibbling at these levels while retaining substantial ammunition for post-recession setup. He should have said not financial advice, right, at this point. So what do I think, right? Like if I'm going to stick to my guns on the halving cycle, then I am still going to say that we're going to sit at these levels through the crypto winter until the next halving in 2024. And we'll see a rise, once again, not financial advice, but we'll see a rise about 3 times the previous all-time high around 2025, hitting around $210,000 on Bitcoin if we're specifically talking about Bitcoin. ETH has quite a few more things to really shake out because we are looking at a complete monetary shift or monetary policy shift for Ethereum. And I have no idea what Ethereum would be at. If it continues to follow Bitcoin, then cool. But it could potentially decouple completely, especially with the merge and how that shakes out here in the near future. From the mining perspective, though, what we are seeing are some better, revenues coming into play, which is definitely helping and will be able to survive if you're at the kind of home level. You still have to deal with inflation. You still have to deal with increasing energy costs. And that is going to be the biggest battle I think that most people have in the current market from the home mining perspective. It will probably be time for you to start doing searches for getting out of, residential power, getting into some sort of commercial power, commercial lease power if possible, cutting better deals, moving your geographical location. All of that sort of stuff is going to be relevant as this shifts. And that will be kind of what determines essentially whether or not you'll survive until the next bull run. And we have the big Ethereum merge coming up here in a second. And that is one where there is a lot of uncertainty surrounding it from the mining perspective as well, because what happens to all this hash rate as it moves off? Obviously, over the past week, the increase in price has been fantastic across most cryptocurrencies. One of the most relevant, I think, being Ethereum Classic, because Ethereum Classic does have that potential to be essentially the second largest proof of work coin by volume once Ethereum moves to proof of stake, and it will have the most security, presumably due to the amount of ASICs that are on the Ethereum network. So that's one that I'm keeping an eye on. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.